This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora. Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we leave with news the American labour market data for April seemed to have something for everyone. But first, in the coming week, it will be relatively quiet, especially on the US data front. But the first quarter earnings season is in its final weeks and still includes some major reporting. Elsewhere, we'll get set-piece central bank announcements from Sweden, England, Brazil and Malaysia, and of course from Australia tomorrow. And China's CPI and PPI will also be released, but not until Saturday. New analysis shows that American labour productivity is rising and at its quickest pace since the 1990s. And in 2023, that was its highest pace in half a century. It is too soon to credit AI, so this could be a new and important trend. Rising productivity is an essential precursor for rising standards of living. But over the weekend, the US reported that their economy added only 175,000 jobs in April, on a headline seasonally adjusted basis, the least since October, and a deceleration compared to the upward revised 315,000 jobs added in March. It fell short of market expectations for a 243,000 increase. This data underscores a significant slowdown from the brisk pace observed in the first quarter and trails behind the average monthly gain of 242,000 jobs over the preceding 12 months. But between the 2 months combined, the slowdown is quite small. But in fact, on an actual basis, employer payrolls rose 800,000 to 158 million and a record high. On a household basis, including the unincorporated self-employed, they rose 234,000 to 162 million. That showed the continuing shift from self-employment to company payrolls that we've been observing over the prior 20-24 months. Either way, there are actually significantly more people employed than the headline levels suggest. Full-time jobs rose, part-time jobs levels shifted lower. But the American labour force is growing slightly faster than these employed levels, and that means their jobless rate ticked up, very slightly admittedly, to 3.9%. And although that is similar to last month, it is at the upper range of what they've had since August 2023. For perspective, the New Zealand jobless rate was 4.3% in March 2024. Average American earnings rose 3.9% in April from a year ago, lower than the March rate of 4.1%. So there are signs of less labour market pressure. US CPI is 3.5%. And we should not forget that labour market data is a lagging indicator. A leading indicator is a metric like the PMIs. And the ISM Services PMI for April turned negative, dropping sharply to a contracting 49.4 in April from an expanding 51.4 in March. This is their first contraction in services sector activity since December 2022, and it surprised markets who had been expecting a continuing expansion. But before we get too carried away, we should note that the new order component remained expansionary, so this overall drop might be just a blip. The internationally benchmarked US market services PMI is still showing an expansion, albeit a slower one. So despite the headlines of a labour market and service sector undershoot, the markets like the implications. Risk appetites returned on Friday, with the S&P 500 rising, bond yields falling, and the US dollar easing. Basically, markets now feel the US rate hikes are less likely as inflation pressures are easing, just as the US Fed itself seems to have suggested. The expectations of one 2024 rate cut late in the year are creeping back. And American vehicle sales came in slightly higher in April, and the highest monthly sales rate since December, now at 15.7 million annualised rate, up 0.5% from the rate of the same month a year ago. For perspective, it reached an all-time high of 21.7 million units in October 2001, and a record low of 8.5 million in April 2020. In China, their publicly traded companies took a net profit hit for the first time in 5 years in 2023, as the protracted property sector slump bled into other industries. The roughly 5,200 non-finance companies listed in mainland China logged a combined net profit of $655 billion last year, according to DZH data. This amounts to a 3% or $20 billion overall retreat. In the first quarter of 2024, the decline swelled to a 5% retreat on that basis. And China returns from its Labor Day week of holidays today, and there's no real signs their property market has bottomed out, as some claim. In fact, banks' mortgage books are now shrinking, undermining those claims the market is stabilising. But global real estate services provider CBRE first quarter profit beat analyst estimates and helped by higher leasing demand at a time when commercial property sales remained under pressure from elevated interest rates. Their revenue rose 7%. In Australia, eyes are turning to tomorrow's rate review by their central bank. No changes expected, but it will be closely followed for signals of the recently talked about rate rise possibility. The US Treasury 10-year yield is now at 4.51% and little change from Saturday. And the price of gold will start today up a minor dollar to just on $2,301 an ounce. And oil prices have stayed down at just under $78 a barrel in the US, while international Brent price is still just over $82.50 a barrel. And the Kiwi dollar starts today slightly softer from Saturday at just over 60.1 US cents. Against the Aussie, we're still at 91 Australian cents. Against the euro, a little changed at 55.9 euro cents. That all means our trade-weighted index starts today at just on 69.3 and down 10 basis points from Saturday. And the Bitcoin price starts today at $64,262 and up 4% from Saturday, and basically back to where we were a week ago. Volatility over the past 24 hours has been modest, though, at just on plus or minus 1.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.